This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Oil climbs after US strikes on a key Iranian export hub over the weekend heightens fears of more crude disruptions. Asian stocks are set to for a lower open as rising energy prices ripple across asset classes. The US and Iran showing no let-up in fighting over the weekend as President Trump mulls the possibility of a deal to end the conflict. And South Korea is bracing for an oil shock by using extra tax revenue to fund a supplementary budget to cushion homes and businesses from surging fuel prices. Our exclusive interview with the country's finance minister is coming up. Oil and that feed through when it comes to energy price inflation and the impact on households and businesses, all of that will be top of mind as we get no less than 8 central banks around the region meeting this week. But taking a look at what's really in focus, and we're watching crude prices in particular, of course, as the fighting between Iran, Israel and the US sees no real off-ramp possibility just yet, of course. There's still sort of the flirtation of a possibility of a deal, but at this point it looks like things are actually worsening rather than pulling back with any sort of respite for this market. We are seeing that climb rising as much as 3.3% when it comes to oil prices after the attacks on the main export hub there. We're also watching the ripple effect across other asset classes. Treasuries are raising those 2026 gains. We're also seeing those continued highs for the US dollar as well, Shery.
Yeah, and Heidi, what a complication really for the more than 20 central banks that are expected to announce their policies this week. And of course, it's the first economic assessment of the damage that we have seen since the Iran conflict started more than 2 weeks ago. And the likelihood is that most major central banks will leave the rate steady. We're talking about the Fed, the BOE, the ECB, the Bank of Canada, the SMB, and even the Bank of Japan. And of course, we have seen the weakness in the Japanese yen continue, touching a 2024 low against the US dollar. And we continue to watch the implications of oil prices soaring because, of course, Japan is so very dependent on Middle Eastern oil. Perhaps a different story when it comes to Australia's rate trajectory because those inflation expectations are being built in. Already, Australia was struggling with the threat of price acceleration, and we are now expecting this week them to actually hike rates for a second consecutive meeting. And you're seeing early at the open right now a little bit of pressure for the ASX 200, but of course, there's a stagger, so do keep out on the trade the rest of the day. When it comes to Kospi futures, we saw the close to the downside. Not surprising, the Korean won is under pressure, the Kospi is under pressure, and we have seen the country now implement a fuel price cap in order to help the economy. We're expecting a supplementary budget. Are we going to see additional government debt? The idea from the government is no, they're not going to be issuing more additional government debt because industries like semiconductors in South Korea have done pretty well. Take a listen.
예, 지금은 이제 중동 상황이 글로벌 경제를 지금 다 이렇게
Right now, the Middle East situation is overshadowing the global economy. The government's top priority right now is responding to the Middle East situation in the short term, while reducing Korea's structural dependence on oil over the medium to long term.
The US and Iran are showing no signs of easing hostilities despite President Trump teasing the possibility of a deal. Officials have been trying to reassure markets that the conflict will not be prolonged.
I think that this conflict will certainly come to the end in the next few weeks. Could be sooner than that, but the conflict will come to the end in the next few weeks, and we'll see a rebound in supplies and a pushing down of prices after that.
Let's bring up Bloomberg senior editor Wendy Benjaminson. And Wendy, so much of this comes down to what the strategic goals are for both sides, right? Without knowing that, without a commitment to that, do we know whether it's going to be days or weeks or months?
We really don't. And every day it depends on who you ask. So there you had Chris Wright saying, the energy secretary, saying it'll be a few weeks. We had Kevin Hassett, the chairman of the Council of Economic Advisors, saying that that it might be sooner than that. You have Hegseth, the Secretary of Defense, saying this is going to go on as long as necessary. And then you have the president, Donald Trump, saying all of those things, sometimes in the same conversation. So we really don't know when this is going to end or how long. Clearly, Donald Trump needs an off-ramp. And Heidi, as you said, flirting with the possibility of maybe making a deal is about where he is right now.
Does Iran want a deal? Because there seems to be a little bit of miscommunication on whether or not they want to talk. They're talking. What do we know at this point? And as Heidi alluded to, what does President Trump want?
Well, President Trump has said what he wants is really, I think the most thing is to destroy Iran's ability to build a nuclear weapon. This is something the U.S. has tried repeatedly over the last 47 years since the new regime took over. And every time they damage it, the Iranians build back. They wanted regime change, and yet the son of the previous Ayatollah is now running the country. So, we didn't really see that. But I think Trump is beginning to feel and hear the political pain that Republicans are going to feel when gas prices keep going up as we get to the summer driving season. And spring break, you have long lines at airports because the Department of Homeland Security is shut down. You have ticket prices going way up because fuel prices are so high. And at some point, he's going to have to find an off-ramp, whether he's achieved his goals or not.
Bloomberg senior editor Wendy Benjamin there with the latest. And the surge in energy prices since the war broke out over 2 weeks ago has continued to ripple across asset classes. We're seeing Treasury yields pushed higher on inflation fears, weigh on global equities and across other assets as well. It's bringing Garfield Reynolds, who leads our Markets Live Asia coverage. It's Fed week. Let's start off with the erasure of the gains in Treasuries. Is there a chance that this is sort of more of a bigger picture paradigm shift?
It's probably a little bit too early to tell just on that front. We have had strong gains in yields across the curve, and it's been a flattening effect. Lower end yields have gone up more than the back end because of that change of perceptions with regards to what central banks are going to do with interest rates. The RBA is expected to hike, everybody else is expected to be on hold after a number of them were priced to consider rate cuts at the very least. So you do have this shift, but for now there's a lot of concern about how long is the war going to last and what are going to be the second and third order effects. And to be honest, I think that markets are still a bit complacent about the damage that this is doing to the global economy and also to what had been a re-anchoring of inflation expectations after the post-pandemic series of rate hikes. So not yet a regime shift, but definitely a lot of disruption and a fracturing, certainly a further fracturing of the idea that treasuries might offer some sort of a haven for investors.
Yeah, and those Fed rate expectations really being reflected on the Treasury pricing. But remember when markets really wanted that rate cut to come very soon, but at the same time, if it comes because of the wrong reasons, because the economy is softening so much, how detrimental could this be for traders into the rest of the year?
That is the sore point, that if you look at the radical shift in global rate expectations towards tightening, where it had been sort of like neutral. There'd already been a shift from potential easing to just going neutral before the war started. Now we've got a shift towards hiking as the main likely thing that's going to happen. So there's going to be rapid hiking if what rate traders are looking for happens. That's going to hurt equities. If you don't get that rapid rate hike, then presumably either peace suddenly breaks out or it's going to be because the economies get seriously damaged. And you've got two of the three, and the two most likely of the three outcomes, they're both bad for equities.
Garfield Reynolds, who leads our Markets Live Asia coverage here, as we are getting some of the latest lines coming from President Trump speaking to the Financial Times about Iran, telling that NATO should help us in Iran, that NATO faces a bad future if allies fail to help. President Trump also telling the FT that they could delay the summit with China's President Xi Jinping, saying that China needs to help unblock the Strait of Hormuz. we have seen more positive sentiment around these China-U.S. negotiations, right? Especially given the talks in Paris on Sunday. We saw officials trying to map out plans for that leader summit later this month. And we even heard from a Reuters report that discussions were remarkably stable. So you're now getting the latest comments coming from President Trump on the China-U.S. summit, also and potential impact coming from how Iran unfolds. Let's discuss all of this with China correspondent Min Lo. So, Min, there seems to be lots of variables into consideration going into this very high-stakes summit.
That's right. And I think what President Trump has said, his latest comments about potentially delaying that Trump-Xi summit certainly is going to set the tone for today's talks, because those talks are lasting 2 days. The two sides met for 6 hours yesterday, and neither side spoke to members of the media as they exit the venue. So today they'll be continuing another day of talks, and really President Trump throwing another sort of wrench into the discussions there. But we heard from Reuters reporting, based on sources, that the talks were candid and constructive, and so many things were discussed, right? We know that the U.S. wants China to buy more agricultural products, and according to those sources that Reuters was reporting from, China was open to buy more agricultural products beyond the 25 million tons of soybeans that they had pledged to do so. So that includes things like poultry, beef, non-soybeans, row crops as well. We understand that U.S. is keen to get China to buy not just the Boeing jets, which was something that Bloomberg has previously reported on, but they also want China to buy U.S. oil and LNG. And of course, the Iran war certainly has brought a lot of energy volatility, something that potentially benefits the U.S., which is the largest LNG exporter of the world. And you heard from Financial Times also reporting that President Trump is asking countries like China to help maintain and keep the Strait of Hormuz open. It is not clear. Analysts tend to believe that China is not generally keen to project power so far away from what it sees as its backyard. So not clear whether China would commit to putting warships in the Strait of Hormuz. So certainly something to keep watching. But also Reuters reporting the introduction of two technical talks, the so-called Board of Trade and Board of Investment. The Board of Trade would meet to discuss and identify products and sectors that China and U.S. could work towards to balance their trade, and the Board of Investments would look into addressing discretionary investment issues between the two sides. And this is coming as we know China has been keen to put more money into the U.S., but they have faced a lot of restrictions when it comes to investments, investigations or scrutiny from the likes of CFIUS that has led to some deals being cancelled over the past years.
Adding to this, we've got U.S. investigations into alleged Chinese overcapacity. There's a lot of complicating factors in these talks. Let's not forget, we don't know how fragile this tariff truce is, particularly with a new round of tariff investigations.
That's right. So that's certainly something to keep an eye on as well, because the U.S. has said they are investigating China's alleged overcapacity, but there's also a separate investigation into China's forced labor practices as well. And just ahead of the weekend trade talks on Friday, we heard from both the Ministry of Commerce and the Ministry of Foreign Affairs from China. Really, it's sort of setting the opening gambit into the trade talks here, because the Ministry of Foreign Affairs said that the forced labor accusations are lies that the U.S. is making up in order to politically manipulate the outcome here. Well, when it comes to trade, the Commerce Ministry said that China has already fulfilled its end of the bargain in the Phase 1 trade war, especially considering the extenuating circumstances of the pandemic. But on the other hand, they said the U.S. has been tightening export controls and investment restrictions and really violating the spirit of the agreement of the Phase 1 trade deal. And China says that if the U.S. insists on advancing these investigations, China will do what it takes to protect its rights and interests. So certainly we'll want to keep watching to see whether that trade truce that was achieved in November, whether that will remain intact given the latest developments.
So many latest developments here too. Bloomberg's China correspondent Min Lo there as we get this hint that potentially President Trump saying that he could delay the summit with China's Xi, which has been reported to take place at the end of this month going into the early part of April. As part of this conversation, Donald Trump also warning that NATO faces a, quote, very bad future if US allies fail to assist in opening up the Strait of Hormuz, giving to that comment that he expects China, among others, to help block the strait. He's also talking about that it's only only appropriate. The beneficiaries of the Strait will help make sure that nothing bad happens there. And if there's no response or a negative response, he says it will be very bad for the future of NATO. So these comments coming from an 8-minute phone call with the Financial Times, coming just a day after he appealed to some of these countries, including China, Japan, France, South Korea, the UK, to join a team effort to open up the choke point of the Strait of Hormuz. Coming up on the Asia trade, we're looking ahead to the slew of central bank decisions this week. We'll be getting the outlook with AMP, why they think the RBA will hike rates, what they think that they should do instead, but with climbing oil prices driving inflation fears ever higher. Later, the former Bank of Japan Deputy Governor joins us to give his take on how the BOJ will move later this week. We'll be speaking with K2 Asset Management too on the opportunities they're seeing amid this ever volatile market. More ahead, this is Bloomberg. Take a look at oil prices as we continue to contend with the uncertainty over the Middle East war and the impact on energy-fed inflation. This, as we just heard from a brief conversation with the Financial Times and Donald Trump saying that he could potentially delay that summit with President Xi in China, some sort of veiled threats over what would happen if the Strait of Hormuz isn't unblocked with the help of NATO allies. This is a big week when it comes to central banks, of course, a couple of dozen in fact, but keenly we're watching some of the ones in this part of the region, kicking it off with the RBA where they are expected for another move. We're also getting Bank Indonesia. The Fed is obviously a major one. They're really stuck between a rock and a hard place, and very interesting, of course, on the other side of the inflation coin to see what the Bank of Japan will do. Let's bring in Diana Mousina, who's the Deputy Chief Economist at AMP. So it feels like a historically difficult time to be a central banker at the moment.
I mean, I wouldn't want to be in their shoes right now because the goals of inflation and keeping growth buoyant are sort of at odds with one another. I think the RBA is really the only central bank in our region, or really the only major central bank around the world that's even considering the prospect of hiking rates, besides the Bank of Japan, of course. And that's really because we are an outlier in the inflation story. Besides what's going on with oil markets, we have a lot of domestic services inflation, and I think the RBA is also less tolerant to higher core inflation compared to some of the other central banks around us.
Do you think in these uncertain times that they should hold?
I mean, my personal view is that they should hold, and this was a difficult decision when we were thinking about what was going to happen tomorrow. Would the RBA hold or would they hike? And our view at AMP is that we think that they should be holding because it's just too uncertain when things are going to slow down. The war could end this week and oil prices could moderate again. I mean, they probably will take a while to moderate back to their pre-Iran levels. But there's the hit to consumer spending and to business spending from high oil prices is sort of the negative growth implication that we could have from high oil prices. It's not just that inflation impact. I think we're more cognizant of the secondary hit to growth that could occur. So in those times, our view is that it's probably better to wait. But given the RBA is quite concerned with already elevated inflation in Australia, they probably will look to hike.
I think that point is an interesting one that, you know, say if the Energy Secretary is right, this war finishes in a matter of weeks. Mm-hmm. We know kind of the pass-through to oil prices will take X amount of time to dissipate. Do you think there could be more of a permanent or a longer-term shock to confidence? Because I'm sure there are households and businesses out there that are thinking, we didn't, you know, this war wasn't on the bingo card. What else could happen? We're not going to be as risk-taking as we were previously.
Well, it sort of felt like that for a while, really, hasn't it? I mean, we've had so much policy uncertainty in the past 12 months.
Forget what came before.
That's right. Yeah. And, I mean, consumers are quite short-term focused. Like when we look at inflation expectations, consumers basically expect inflation to be whatever it was. And petrol is actually a key driver of inflation expectations. So consumers generally are a bit shorter lived, I guess, in that process of thinking about what's ahead. Businesses, yes, it might take a bit longer for them to become a bit more confident again. But again, the macro environment is just changing so quickly. I mean, a few months ago we were talking about the impact of tariffs and then the Supreme Court decision around tariffs in the US, and now we're talking about a war. So what could happen next? There's just, when we look at things like trade policy uncertainty around the world, it's actually around a record high, and that is fundamentally due to the politics and the policies that are coming out of the different governments around the world, and in particular the US.
In the U.S., you guys were talking about the gas prices, retail gas prices averaging at the highest level in more than 2 years when you have a midterm election coming up in November. How does this change sort of the rate trajectory and the views on inflation expectations for the Federal Reserve? And what are the implications then of those change expectations for central banks across Asia?
Well, we know that Trump and the administration is very cognizant of the housing affordability story in the US and just the general cost of living affordability story. So I think from that point of view, that's a major constraint on the war in the Middle East, that they have to reduce the cost of living pressures for consumers. And that is one of the main reasons why the war probably will not be prolonged for the rest of this year, because they do have the midterms coming up soon. I think for the Fed, they're probably more comfortable with holding rates steady for a bit longer compared to a bank like the Reserve Bank, because growth is holding up okay in the US. It's sort of been mixed lately. Inflation is at an okay level too. You know, they're sort of obviously higher than the target, but it's not at a runaway level or a problematic level like the RBA would see it here. So, I mean, the Fed is being put in a difficult place right now because inflation is going to increase in the short term, but there's probably no real need right now to cut interest rates at a very quick level in the US.
We're seeing sort of a similar feeling across the world with major central banks, traders thinking the major central banks will actually delay any rate cuts and perhaps swing a little bit more hawkishly given those inflation expectations. What are the implications for banks like the Bank of Japan? Because that also puts more pressure on the Japanese yen.
Yeah. I mean, all the central banks are sort of going through the same thought process, I suppose. I mean, again, for Japan, the focus will probably be more on the fiscal side in the short term rather than on the monetary side. And my personal bias is that at a time when inflation's rising mostly due to supply issues because of higher oil prices and the impact that has going through the supply chain, it doesn't really make sense to be raising interest rates when the impact of that is really on the demand side. So I think that it probably just means that most central banks will probably want to wait and see what happens in the next month or two, because we keep on getting headlines from the US that this is not going to be a prolonged war, that they want this to end soon. And clearly they're trying to find ways to reduce oil prices right now through, through trying to open up the Strait of Hormuz, for example. So I think most central banks will probably try and look through some of the supply issues right now and hold policy unchanged.
Diana, always great to see you. Diana Mousina, Deputy Chief Economist at AMP. More ahead here on the Asia Trade. This is Bloomberg.
And we have the latest comments coming from China's Ministry of Commerce responding to U.S. allegations of forced labor in their 301 section probe. Now, this probe is on forced labor practices, also excess industrial capacity, but China saying that it reserves the rights to protect its rights and interests, and that China says that the U.S. probe is seriously disrupting global chain stability, coming at a time when we could potentially see the Trump-Xi summit being delayed. President Trump telling the FT that this could actually be pushed back. This is Bloomberg.
many countries in the Indo-Pacific are gravitating towards the United States. We had over $50 billion worth of deals with U.S. companies. All the dialogue that has taken place has been with an understanding that by entering into new deals with the United States, it allows them to reduce their reliance, which was so heavily concentrated in the Middle East.
That was the U.S. Environmental Protection Agency Administrator Lee Zeldin there speaking to us earlier. Take a look at oil prices. This as markets continue to grapple with the prospect of no certainty coming to an end for this Middle East conflict, continuing to see those prices climb as we saw that key Iranian export hub of Kharg being attacked as well. We're seeing Brent crude there higher by 1.5% there. New York crude there last trading at about a quarter of 1%. This essentially has all but cut off global customers from the region's energy supplies now for more than 2 weeks, and that bombing of Kharg Island just adding to the scope of the conflict. This is already the largest supply disruption in the history of the global oil market, according to the International Energy Agency. Well, the Wall Street Journal was reporting that major U.S. oil firms have warned the Trump administration that the energy crisis unleashed by the Iran war is likely to get worse. For more, let's bring our Bloomberg oil and shipping reporter, Waylon Sun. So things certainly worsened or went in the wrong direction over the weekend. What are the sort of convictions for a quick turnaround, given there doesn't seem to be any sign of any sort of agreement being arrived upon between the parties in this war?
That's right, Heidi. So over the weekend, we've seen signs of the war escalating, right? We see the strikes on Kharg Island. We've seen drone attacks on this Fujairah oil exporting hub for the UAE outside of the Strait of Hormuz. And we have heard calls for things to de-escalate, but they have no details for things to head in direction. So for now, what we're seeing in oil prices is the reflection of that risk. It's not a full blown out risk yet, but we do see signs of this war not having a clear off-ramp as of now.
Waylon, of course, we know that Asia imports a lot of energy from the Middle East. Who are the most exposed here?
We definitely see India and China as one of the biggest importers of Middle Eastern oil as being the most exposed to the risk from this war. And already we see today that we have Asian consumers having to pay higher prices at the petrol pump. We see from India to Singapore to Japan, a lot of these consumers are feeling the bite from the lack of oil that's coming out from the Middle East right now. And we do see the IEA calling for more reserves to be released to Asian consumers. And already some of the refiners in China and also in East Asia, who are actually big exporters of these refined products that they take the crude oil from the Middle East to work on these products for, they have also cut back on the exports for the refined products. So the longer this war drags on, it's going to have a wider impact on the global consumers around the world. But for now, Asia is the biggest. Is feeling the heat the most, and we do see some form of attempts at trying to get more of that crude from the Middle East. We do hear of India trying to get some of that oil by talking to Tehran to avoid having those ships getting hit as they pass through Hormuz. But those are more on an ad hoc and individual basis, and we wait to see further details on whether more ships can sail through the Strait of Hormuz so that Asian consumers and Asian economies can have that off-ramp from this war.
I do wonder, in the meantime, should we expect to see more Russian crude being allowed to market? Are there any other workarounds?
That's a very interesting question. We see Russian oil as being used as a buffer because we have seen the Trump administration allowing carve-outs for sanctioned Russian oil to flow to Asian consumers, mostly to India, because India is a very big taker of Russian oil. A lot of it has already floating around the seas nearer to Asia. And once these carve-outs were issued over the past week, we do see ships entering India. And that's certainly some form of relief for the refiners. But the longer this war drags on, we may potentially see more waivers from these sanctions from the Trump administration. But one thing's clear for now is that Russia, interestingly, has become one of the biggest winners from this war as we speak.
Bloomberg oil and shipping reporter Wei Long Sun there with the latest. And take a look at how we're trading. It's all about energy assets, of course, again, as really some of the scant gainers in this part of the world. This as we continue to see the likes of Santos, for example, putting on another 1.4%. This as really across the region, we've seen the energy stocks really benefiting, given that Brent has added more than 40% over the past 2 weeks. WTI still trading near that $100 mark there, and that bombing of Kharg Island really further increasing the scope of the conflict, which has already been stipulated by the IEA as being the biggest supply disruption in the global oil market ever. But taking a look at one of the other stocks that we're watching very closely is Lynas Rare Earths. We've now flipped into negative territory. Lynas signing a binding letter of intent to supply the Pentagon with rare earth oxides over a 4-year period. So that's a $96 million deal, and that was confirmed in a statement on Monday. So this is one of just 2 major rare earth suppliers outside of the Chinese market, which of course holds a close to a monopoly over the broader supply chain. Lynas currently has a mine and a processing plant in WA, another facility in Malaysia. Shery.
And Haidi, we are seeing already countries responding to that commodity shock coming from the Iran conflict. South Korea will use extra tax revenue to fund a supplementary budget in a bid to cushion homes and businesses from rising oil prices. The country is one of the world's most energy import-dependent economies, as Finance Minister and Deputy Prime Minister Yun-Cheol spoke with us exclusively on Friday.
지금은 이제 중동 상황이 글로벌 경제를 지금 다 이렇게
Right now, the Middle East situation is overshadowing the global economy. The government's top priority right now is responding to the Middle East situation in the short term, while reducing Korea's structural dependence on oil over the medium to long term.
Which is why you just announced a fuel price cap. Why this specific measure instead of others more potentially broadly or more targeted measures to support the economy?
도입한 게 중동 이전에
Currently, the imported oil is from before the Middle East conflict. During this 2-week period when imports have been halted, it will come in at a higher price. However, if the future imports become even more expensive, the government plans to raise the price proposal accordingly to compensate. The government plans to decide at that time whether to reduce taxes again.
정부가 그때 가서 판단할 계획으로 있습니다.
If you actually need to help the refiners, does that mean that the government will be using its own budget in order to do that? And how are you planning to pay for that cost?
그래서 만약에 이 과정에서
Therefore, if refiners incur losses during this process, the government intends to compensate for those losses.
Would that come from the extra budget?
그래서 저희들이 필요하다면은
We also have plans to prepare an additional supplementary budget if necessary. And in fact, the government has already begun working on this internally. Therefore, it's not just about compensating for the proposed oil price increase. The government has begun preparing a supplementary budget to support those suffering losses due to rising oil prices. Our freight transporters, delivery service providers, exporting SMEs, small and medium-sized companies, the self-employed, small business owners, and young people.
편성을 시작했다 이렇게 말씀을 드리겠습니다.
There's so much skepticism right now, though, in the markets. I mean, we have seen the incredible rally of the Korean stock market just to fall incredibly earlier this month as well. Not to mention the pressure on the Korean won. What more can the government do?
지금 코리안 원의 이제 절하되는 부분은
The won's recent weakness is not due to shortage of dollars. Korea holds over $1 trillion in combined dollar assets, including roughly $500 billion at the National Pension Service, more than $420 billion in state reserves, and over $100 billion in private holdings. The recent depreciation has largely reflected Middle East-related developments, while last year's movements were influenced by increasing outbound investments by residents. This year, the current account surplus is expected to improve further on the back of the semiconductor boom. Secondly, WGBI inclusion could bring additional foreign inflows into the bond market, and the pension's new hedging framework could enhance dollar stability.
The rally that we have seen recently, has that reflected the economic fundamentals of South Korea? And how much is it speculative herd behavior together with FX, together with the Korean stock market? And is that a risk?
지금 한국 스탁 마켓은 이 단기간에 세계 1등으로 많이 올랐습니다.
The stock market's recent drop of over 700 points following Middle East tensions is seen as part of a normalization process after strong gains. It is not viewed as drastic sell-off. We are closely monitoring volatility in the foreign exchange and bond markets and stand ready to take policy measures if necessary to stabilize conditions.
The uncertainty coming from the trade environment. Again, we're hearing from the U.S. Trade Representative, 301 section probes into alleged excess manufacturing capacity. Have you spoken to Washington about that already?
최근에 워싱턴하고 얘기는 하지 않았지만은요.
Although we have not had recent discussions with Washington, the U.S. side has reacted very positively to Korea's passage yesterday of the special bill related to U.S. investment. The overall response from Washington has been very favorable. Now that the legislation has passed, specific investment projects will likely be determined through working-level consultations. The U.S. has shown strong interest in the energy sector in particular, and Korea believes it has competitive strengths in that area. We intend to pursue mutually beneficial cooperation that will be good for both Korea and the U.S.
그런 방향으로 이제 협의를 하려고 합니다.
When it comes to the Supreme Court actually striking down many of President Trump's tariffs, for Korean companies, is that an opportunity or does it just create more uncertainty around trade?
지금 이제 미국 대법원에서
Regarding tariffs, if the U.S. Supreme Court's decision invalidates the 15% reciprocal tariff while maintaining 10%, Korea, having already reached a 15% agreement, does not expect higher rates than previously agreed. On Section 301 actions affecting surplus countries, including Korea and Japan, the government will actively engage and explain its position.
South Korean Finance Minister and Deputy Prime Minister Yun-Cheol speaking exclusively to us. Over in Indonesia, President Prabowo Subianto also saying that he would only consider temporarily exceeding Indonesia's statutory budget deficit cap for emergency situations. Speaking exclusively with Bloomberg, he says that could only happen if oil prices stay elevated for a sustained period. Prabowo also underscored his commitment to fiscal discipline and says Indonesia must live within its means. Of course, we do have Indonesia's central bank deciding on rates this week. The expectation is for a hold given the pressure already in the Indonesian rupiah, actually pressure overall across Asian EMFX. We have seen Indonesian central bank already intervene in foreign exchange markets. We have seen India already do it, Taiwan as well. China signaling support for the currency by setting a stronger daily fixing. What are we talking about? 15 straight weeks already. We do know that central banks across Asia have $8 trillion of foreign exchange reserves, but with this incredible rally and rebound that we're seeing in the dollar, given the safe haven demand, we'll continue to watch the FX space closely. This is Bloomberg. Take a look at how the Japanese markets are setting up for the open at the top of the hour. We had seen already 2 sessions of losses for the Nikkei. We're seeing a little bit of pressure, really not doing much. But when it comes to the Japanese yen, a little bit of strength towards a 159 level. But remember, this is after falling to the lowest level against the U.S. dollar since 2024. We have heard from Finance Minister Katayama saying that they're in closer contact than usual with their U.S. counterparts, but she declined to comment on intervention potential. And we have seen a very limited impact from her comments. Not surprising given the risks emanating from the Middle East. Japan depending on Middle Eastern oil for about 90% of imports. And the trade minister now saying that climbed to more than 95% in January already. Much of that supply moves through the Strait of Hormuz. The Iran war related supply issues coming also as Japanese households have already been facing rising inflation. We're talking about surpassing the BOJ's 2% target for 4 straight years. Let's break down the economic impact. And we have Masazumi Wakatabe, professor at Waseda University and former deputy governor at the Bank of Japan. Really great to have you with us in this very critical moment for the global economy. What are the biggest implications for Japan stemming from the Middle Eastern conflict?
Well, of course, that's the after the Sanaenomics. I mean, that's the Mr. Takaichi became the prime minister. The Japanese economy looks brighter, but now that we are seeing some sort of dark clouds, so that's we are seeing some challenges ahead. Yes.
Will the challenges come mainly from the weakness of the Japanese yen as well?
Well, I don't think that way. I mean, that's the exchange rate is kind of the consequences of several factors. So that, for example, that's the interest rate differentials between the BOJ and the Fed, and also other external factors. So that I'm not saying that that the weakness of Japanese yen is the cause for the weakness of Japanese economy. No.
So what is the biggest challenge then?
Well, right now, I think, of course, that the Iran war and the hiked energy price poses a greater risk. I think that Japan has now about 1.0% real growth rate. And if, this depends on the size and magnitude and also duration of the hiked energy prices. But this may, that's cause damage to the real GDP growth rate. And also, this may push up the push the inflation rate. So if that's the case, Japan is going to see some sort of slowing down in the real economy and the elevated the inflation rate.
And then the thing is, for Japanese households, it really doesn't matter how inflation comes through, right? Is it post-cost? Is it demand-driven, right? I mean, they are feeling the impact of higher prices. And yet we're talking about how wages have turned positive, adjusted for inflation for the first time in more than a year. Are Japanese people feeling that on the ground?
Well, I think that the Japanese people begins to feel the sort of the better outcomes, but I think it's still not enough. I think that it's still not long enough for Japanese households to feel the real wage growth. So, so this is just a critical moment. So we have, that's the cost push factors, and the wages I think will grow. But this time, for the short term, the real wage may go to the negative territory once again. Okay.
Lots of people speculating on when the BOJ will move. Some saying July, some saying April. When should they move?
Well, I cannot say because now I'm on the council on the economic and
But
fiscal
you're looking
policy.
at all of the different factors right now. If you have
Sure.
inflation surpassing 2% for 4 years, and you still have the threat of potentially oil prices really wreaking havoc on the economy, if you were in that board still, what would you do?
Well, I mean, that's the thing is that you kept saying about the inflation rate has been above the target for 4 years, but actually the most recent one shows that the inflation rate in Japan is slowing down. The headline is 1.5, so below the target. So because the cost push factors are actually waning. So that's in that sense, the reason why the wage growth becomes positive is that the inflation rate has been slowing down. So in that sense, that's the BOJ can still wait for the inflation to pick up. I think that they forecast that for the latter half of 2026, that the inflation rate will come back to the target level. But now we have this uncertainty surrounding the Iran war. So that's, I think it's better for them to be more cautious than ever. Yeah.
How close are we, do you think, to that virtuous cycle? And do you think as a result of energy prices, this type of inflation, that confidence could really take a hit for households and businesses?
We'll see. I think that this depends really on the duration and the magnitude of this shock. So that if this shock does not persist for a long time, I think that the confidence will not be so shaken. But remember that the corporate sector may reconsider their wage hike stance come April or May. So I think they have already decided on paper about their wage growth schedules. But I think that's if this turmoil or uncertainty persists longer, then that's they may reconsider the wage hike, so that we may not have the sort of virtuous cycle from prices to wage growth.
It's hard enough. It's been difficult enough to get to this point, right? We know that corporate profits have been very good. The environment or the conditions for stronger wage increases are already there, but you're saying that the conflict could actually result in progress being lost.
Yes, right. Well, I'm not quite sure that all the progress has been lost or is going to be lost. But this is a precarious time. So the people must think ahead and must think about other sort of scenarios, including this the more sort of durated this conflict.
Masazumi Wakatabe, always good to get your insights on our shows at a very critical time for Japan. He's a former deputy governor at the BOJ. And of course, you can hear more from this conversation. Japan Ahead every Monday at 8:40 a.m. If you're watching in Tokyo, subscribers can watch this live on the terminal using the function TV Go. Also, you can watch it back for any parts of the conversation that you may have missed. Still ahead this morning, don't miss also our exclusive conversation with the Cambodian Minister of Mines and Energy. That's on Insight at the time on your screen. This is Bloomberg.
As I saw in COVID, sometimes people who can't sell the thing they can't sell will sell what they can sell. And so private credit can certainly infect public credit. I never would have thought ETFs for high yield could trade at 10, 15 point discounts. ETFs, they did, and people sold them there because they needed the money. And so I think actually public markets are very affected by this private credit problem.
Cyber Capital Management CIO Boaz Weinstein there on these growing private credit risks. And let's take a look at what we're watching when it comes to some of these broader assets. Of course, private credit is just one of the other stories, the idiosyncratic stories still brewing in the background. We've seen some really big moves just even the past week or so. Some examples of private credit funds grappling with the wave of redemption requests, growing concerns over the quality of the loan book, particularly when it comes to those extended to software companies that are under threat from the AI risk. So that is one thing to worry about. We've also, of course, got the continuation of the Middle East conflict there, the drive up in oil prices, and all of this is having that cross-asset impact, particularly when it comes to treasuries erasing those gains for this year, Shery.
Yeah, we are really watching the bond space across Asia as well because lots of expectations that yields will continue to rise, especially on JGBs, given, of course, as you mentioned, Haidi, higher oil prices. Also, the yen weakness here in Japan, which has fallen to around that 2024 low. We continue to see the pressure on the Korean won on the Kospi as well, so do keep an eye for those opens. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. We'll be watching the reaction to continuing to surge oil prices. Of course, the ongoing Iran war being the catalyst. And Haidi, really a complication for more than 20 central banks making rate decisions this week, including the Federal Reserve, the Bank of Japan, where I am, and of course the RBA in your neck of the woods.
No envy for what these central bankers have to contend with in terms of whether this conflict lasts for a few more days, a few more weeks or beyond, right? No certainty when it comes to relationships between China and the US either. We're hearing President Trump saying that that summit at the end of the month could be delayed.
Yeah, we'll be watching that potential U.S.-China tensions also continuing to ramp up as the offshore yuan has been pretty strong in the last few sessions. A little bit of a divergence from most major Asian currencies across the world, given that we have seen, of course, the strength of the U.S. dollar that has pressured the Japanese yen, for example, to touch a 2024 low. We are now seeing a little bit of a rebound in the early Monday session at that 159 level against the greenback. We're watching the Nikkei, which already has lost for the last 2 sessions. But of course, the key question is what happens with the Bank of Japan this week. The expectation is for a hold, but we will be watching very closely Governor Ueda's comments around inflationary pressures given the surge in oil prices. And that also could lead to some pressure on JGBs, according to MUFG analysts that are talking about the weak yen also potentially pressuring the bond space. And it's something that we have seen around Korea as well, right? The Korean bond market has been one of the worst performers this year. And will additional government debt be issued in order for the South Korean economy to support the households and businesses that are suffering from higher oil prices has been a key question. And we have heard from the Deputy Prime Minister Yun-Cheol talking that there will be no additional debt issuance. So do watch out for the bond space in South Korea. Right now, we're seeing a little bit of a pickup when it comes to the KOSPI and the KOSDAQ after downside pressure last week, given the risk-off sentiment around the world. A little bit of strength for the Korean won. But look at that, Heidi. We're still very close to that 1,500 level.
Yeah, it really doesn't help that we continue to see the dollar surging right to the highest level this year. Still that haven demand happening as well. We're hearing now from President Trump making some comments when it comes to the operations in Iran, saying that they're making seeing some strong results in Iran. They're talking to countries about policing the straits, that the US doesn't get much oil from the Strait of Hormuz. He's, of course, spoken before about countries like China getting that flow through from the Strait of Hormuz, and that sort of justifies his idea of why some of these countries that he's reached out to should be helping, in his words, unblock Hormuz. He's saying that they have essentially defeated Iran, but that he doesn't think that they're ready to negotiate, but they will be ready to negotiate at some point. He said when it comes to the operations on Kharg Island, which of course have driven this latest surge in oil with that major Iranian hub, that there's just a little bit of area standing on Kharg Island there as well. Trump there also in these comments again renewing his calls for NATO members and other countries to help when it comes to the Strait of Hormuz. He also had said in previous comments that he wasn't really expecting that to yield much of a response. President Trump at this point saying that Iran has, quote, very little firepower left. So we'll continue to monitor because, of course, investors, markets really grappling with any evidence or signals in one direction or another on how the future of this conflict on oil prices will play out. Let's bring in George Boubouras, who's a Managing Director for Research, Investments and Advisory at K2 Asset Management. George, always great to have you with us. So Trump continues to talk about the strength of the military operation, the success that he's seen in these operations. At the end of the day, though, there doesn't seem to be an opportunity for de-escalating right now.
Good morning, good to be here. Yes, of course, it's the uncertainty of how do you get out of this. And we as fund managers, like many people around the world, we reach out to our geopolitical advisors, then we backfill, look at scenarios. But quite clearly, it's how do you get out of this scenario, given the implications, obviously, supply chain disruptions, and obviously some implications for many economies. So many moving parts, but there are implications for our portfolios in the short term, and there will be implications for the portfolios and economies in the medium to longer term as a consequence of this is the third week of the conflict.
Yeah, tell us about what those portfolios, the de-risking or the diversification necessarily looks like.
Yeah, so across the balance funds and the growth and high growth balance funds, we'll quickly go around all the asset classes and the capital structure right top to bottom. And we are quite happy with developed market equities, the quality of earnings, the double digit. We were revising those higher going into quarterly earnings as of late December, late last year into Jan-Feb. We think that will come through that high, that 12 to 14% double digit growth. The earnings are coming through, the valuations are coming off a little bit. That's quite good in the aggregate. We like senior unsecured credit at the relative to the high yield. High yield has been a really good performer. We'd like to exit that and go into that senior unsecured investment grade. We've been doing that tilt for 6 months now. We've been quite happy with that. We believe some issues will be very small pockets. PE credit can be a bit of a spillover into some high yield sub-investment grade. So we're just addressing that over the past 6 months. And we still like the broadening out trade in developed markets to that mid-cap into the real economy, which has obviously rallied. The hedge that's worked so far is energy names, not gold and not US Treasuries, but US dollar and hard assets. So portfolios are holding up relatively well. They've got those low correlations across your asset classes, but there was pockets of issues that we were dealing with around the world with that PE credit, and this is not helping the situation. Again, there's that demand destruction that's going to be coming through for the emerging and developed economies. It impacts emerging economies more with the higher supply side costs right across the energy, petroleum, and inputs across many components of our manufacturing sector. So that impacts that emerging market, which will have a bit more pain over the next 3-4 weeks. So they're the moving parts, and then just got to play that strategy of how long can oil stay at these levels. And my final point for questioning is that from $125 a barrel, we are estimating over a 90-day period, that puts you towards that recessionary scenario. But you just need the market to be there for 3-4 days for them to contemplate and price it in. So they're the risks that we're dealing with.
We continue to hear, George, from President Trump speaking right now to reporters saying that there are about 7 countries helping the United States when it comes to Iran, but he's really singling out China, saying that they should actually come in to help on opening the Strait of Hormuz. In fact, let's go to President Trump's comments right now, who's speaking at the moment on the oil prices as well, that they have a lot of oil, that the U.S. has a lot of oil, that they don't need more oil at this point, that China should come in to help, in President Trump's opinion. He's speaking aboard Air Force One. George, it looks like this conflict will lengthen. It's not just about the price level of oil, right? It's about how much longer this conflict could last, leading to more inflation expectations. As an investor and as a consultant on where markets could go from here, what are the most important variables at play during the Iran conflict that will move the markets?
Yeah, so an awful lot of moving parts, but very quickly, the US economy is self-sufficient with energy and net exporter. That's a protection and a hedge, hence the US dollar rally. In addition to that, the US dollar strengthening, all things being equal, is less inflationary for that supply shock that's coming through with that demand destruction. So the US economy, relative to other developed market economies, is in a relatively better position. And given the central banks have got the difficult decisions around the world, most are hiking stage cycle or re-engaging in higher the rate cycle. That looks, the US stands out as quite an outlier there. Very quickly though, higher energy prices and the inability for the unofficial segment of the Chinese economy to take that Venezuelan historically and Iranian oil at a cheaper price. They've got that segregated hedge in their economic system that obviously deals with the Chinese official oil refinery in the US dollar market. That's obviously going to impact Chinese growth 1 year forward for domestic demand, but China with the export sector can claw it back the X minus M. So they're the moving parts. So China gets impacted and so does Europe. So with those comments that you've just said with President Trump trying to reach out to China, which is an unlikely alliance there to help with the Straits of Hormuz, that seems like a reasonable playbook and good commentary for appeasing, obviously, other developed economies. So that seems to make a lot of sense because, obviously, in hindsight, this build-up of the ballistic missiles was just at such a degree it had to be addressed. That's what our geopolitical advisors are telling us. Now that we're at this other end, how do you exit? It gets messy, easy going in, messy going out. So as you've just said with what the president's saying, to reach out to China as well as all other G7 and also NATO and the United Nations in general, but to get, obviously, China to be involved in this seems like a good place for China to be in as the middle ground and obviously part of the solution.
So you have oil prices surging. You have potentially more tariffs, especially if you're talking about China having the upper hand. And what if President Trump doesn't want to speak at all, right? We're talking about potentially delaying the summit altogether. Is this going to be a huge inflationary shock for the world? And we do have more than 20 central banks deciding on rates this week. What's the fallout for these other countries that are caught in the middle?
Yeah, so there is a supply shock and inflation scare for the rest of the world. Again, very quickly, the US, in the energy exporter, high US dollar, it's protecting itself from that inflation surge. It could be worse than what it is, but they're going to have some impact, not as bad as other developed economies and nowhere near as bad as emerging economies. In addition to that, Iranian oil supply obviously is drying up in the export sector. Is going to impact the domestic demand in the Chinese economy more than anyone else. So it's in China's interest to be able to find some solution here in that region as well, because their domestic demand gets hurt aggressively given they are importing that cheaper oil up until recently, until 3 weeks ago. So many different moving parts. Then you go very quickly to the US, the PCE core, a bit problematic, but gives them an opportunity with a weaker labour market to cut rates. But at the same time, the inflation hawks seem to be winning with their rhetoric and should keep that discount rate higher for longer.
Right.
Again, many moving parts. It's a timing issue.
So Georgia, hold on a second, because we are actually getting the audio from President Trump, who's speaking aboard Air Force One. So let's just take a listen for a bit.
It's much higher than that. They shot and killed 32,000 protesters who were greatly enthusiastic and want to see a change because they've destroyed the country. The people that are running it destroyed the country. But think of it, they shot and killed much more than 32,000 people. Now they put out a notice 2 days ago that we're going to shoot and kill any protester. And they don't have guns, meaning the protesters, they have no guns. So I can fully understand why they're not doing it. Oh, one other thing that was AI generated, they showed about 250,000 people in a square saying how much they love Khomeini. Totally AI generated. It never took place. The media knew it didn't take place, but they built it up like they have great support. They don't have support. And that whole rally that they had 4 days ago, that they said was fake. It was AI generated. AI can be very dangerous. We have to be very careful with it. But the rally, because I was actually surprised to see, because I don't know how much the people hate this leadership. This leadership has destroyed the country. The rally that everybody, including ABC fake news, your network is the worst, but everybody put that rally on like, oh, and even I was surprised. I looked. It turned out, I found out today, it was a totally AI-generated fake news story put out by news organizations in the U.S. and elsewhere, and honestly, they really shouldn't be allowed to do it.
Mr. President, are there any diplomatic talks going on between the U.S. and Iran at all now?
Yeah, we're talking to them.
What are the?
But I don't think they're ready. But they're getting pretty close.
Mr. President, you mentioned
I don't know that I want to make a deal, because you know what? First of all, nobody even knows who you're dealing with, because most of their leadership has been killed, as you know, right? So I don't even know that we want to make a deal.
Mr. President, you mentioned that Iran's military...
They want to make a deal badly, yes.
Mr. President, you mentioned that Iran's military has been decimated economically in other ways. Are you ready to officially declare victory against Iran?
There's no reason to. I think I'd just say they're decimated, but I would do that. I think that we've done damage to them right now. If we left right now, it would take them 10 years and more to rebuild. But I'm still not declaring it over. Our military is incredible. The job they've done is just incredible. And the problem is that when you look at fake stories written by you people, written by and generated by AI, it's incredible. And I just wonder, like Jeff, do you know that these are fake stories? Did you know that the rally of 250,000 people, the supposed rally, was fake? Did you know that?
I saw the reporting on it.
And you wrote about it. You talked about it. And you knew it was fake. It was AI generated.
No, I didn't know it
You do it.
Sir,
Anybody that knew the country knew there's not 250,000 people willing to stand in a circle and say how great Khomeini is. Okay.
So are you unhappy? You talk about the military objectives.
Yeah.
What about political leadership in Iran? What type of leadership needs to be?
Some are dead, but we have some people that we think would be good. I mean, we'll see about that.
Is that a requirement, sir?
It's something we talk about. See what happens.
Can you explain why we're sending 5,000 Marines and sailors? Can you explain why
You're a very obnoxious person. Go ahead. What were you going to say?
I wanted to ask you if you talked about about selling oil futures as a way of capping prices, trying to keep prices down at the pump.
The prices are going to come tumbling down as soon as it's over, and it's going to be over pretty quickly.
Do you have any concerns about the political impacts of this? I mean,
I have to do what's right. You know, political, I'm sure everybody has concern. I have to do what's right. I can't say that, you know, gee, I don't want to have any impact on oil prices for 3 or 4 weeks or 2 months, and we're going to let Iran have a nuclear weapon and blow up the entire Middle East and beyond, right? Because, you know, they were going to blow up the Middle East. If I didn't terminate the Obama horrible deal, the Iran nuclear deal it's called, if I didn't terminate that in my first term, they would have already had a nuclear weapon, and they would have used it immediately upon getting it. And if I didn't send in the B-2 bombers to bomb the hell out of it and obliterate, and that's what it was, we obliterated that site and stopped all their potential nuclear. If I didn't do that, you would have had Israel and the Middle East hit by nuclear weapons. And we wouldn't be talking about this right now.
So you have
what I did in terminating the Iran nuclear deal, and what I did in sending in the B-2 bombers, it was one of the most incredible attacks anyone's ever seen. Late at night, dark, no moon, and every single bomb went right down those chutes and blew the whole place apart. If I didn't do that, you would have had nuclear warfare in the Middle East, and I think Israel would have been obliterated. I think lots of the Middle East would have been. And you saw that when they sent thousands of missiles to countries that didn't expect anything. They didn't think they were going to be involved. And yet you look at what happened with Kuwait, UAE, Saudi Arabia, Qatar. You take a look at Qatar. I mean, they sort of got along. And all of a sudden they're being barraged by missiles. These people would have used nuclear on the entire Middle East. And that was their plan, take over the whole Middle East. And it failed with the nuclear. And then they had thousands of missiles. And for the most part, largely, we've now destroyed those missiles. Thank you very much, everybody.
One other
Thank you.
Tell us about Cuba. You're talking to Cuba. What do you want to hear from them? And
well,
what is that risk for them?
I am holding Cuba. Cuba's a failed nation. Cuba also wants to make a deal. And I think we will pretty soon either make a deal or do whatever we have to do. We have a lot of great people that happen to vote for Trump. Not that that matters, but we have a lot of great people from Cuba that were violently and viciously thrown out of the country, and worse, their families were killed. And so we're talking to Cuba, but we're going to do Iran before Cuba.
And what is that risk?
You know, people have been waiting 50 years to hear this story with Cuba. When I left Palm Beach today, there were thousands of people on the road. I'm sure you saw them. And they were from Cuba and from Venezuela, all friendly, waving the flag and waving the American flag. They've been waiting 50 years for what's happening with Cuba. So I think something will happen with Cuba pretty quickly.
Do you have an opinion on the Iran school strike? Is it looking more likely that it was the U.S.'s fault? Maybe the Iran school strike that happened on the first day of the war?
We don't know. That's under investigation.
Mr. President, what do you want to see in a deal with Iran to end the war, and how does that differ from Israel's objectives? You said the other day they might have different objectives.
I think we have similar objectives, really, but could be a little bit different. You know, they're there and we're very far away, but I think we probably have pretty similar with Israel. The relationship has been very good. The militaries are very well coordinated. Ours is the strongest by far in the world, and they have a real good military, you know, really good. They have a lot of our weapons. They have our planes, they have our missiles, they have our Patriots, they have a lot of our weapons. We have the best, we make the best weapons in the world. And now what we're doing, as you probably saw, we have the Raytheon and all of the Lockheed, all of these companies are now building plants because we don't want to wait. We make the best weapons, but we don't like to have to wait for them. What we do have, though, is at a very high level, we have unlimited weapons at a medium to high level. And they're really doing the trick. And we're not using they call it the elite weapons, because frankly, they haven't, outside of the original attack, they haven't been necessary. But these companies are building facilities, and they've already started all over many of them are building many buildings right now to make so that we wait 2 weeks instead of 2 years for weapons.
Sir, last week you said that we're nowhere near sending ground troops to the Middle East. Are we still in that situation?
People like you about that. I mean, why would I tell you I'm sending or not sending? I don't talk about a military strategy. Who would talk about it? I mean, who would answer a question like that?
Do you have a comment on the 6 service members who passed last week?
Who else?
What do you want to see in the deal? Because earlier you've said reportedly that the deal wasn't good enough.
There will be no nuclear weapons. That's where it starts. And then on top of that, there's plenty of things that we're going to get. Thank you very much.
The comment about Israel?
All right, there, President Trump speaking to reporters aboard Air Force One, canvassing quite a lot of issues, but obviously front and centre were really trying to find out as to where the operations in the Middle East are at the moment. He spoke very favourably in terms of the military objectives on Iran between the US and Israel and the collaboration there, saying that oil prices will come tumbling down as soon as the war is over. When it comes to how or when that war would end, President Trump saying that they're not declaring victory on Iran just yet, but that Iran wants to make a deal badly, that there are discussions, we're talking, he said, and there's also work when it comes to trying to alleviate the pressures on the Strait of Hormuz as well. Of course, President Trump has called on a number of partner nations, China as well, with their help on that. President Trump on the oil situation, saying the US has a lot of oil, that they don't need it, and also that there are 7 countries helping the US when it comes to alleviating the blockage, the choke point. Let's bring back George Boubouras, who's been staying with us ever so patiently. George, we appreciate your time. He also, President Trump in the conversation, spoke about China and obviously his desire for Beijing to come in and help when it comes to not just Iran, but also with the Strait of Hormuz. When you take a look at China, I know that you've said that the leadership is very pragmatic when it comes to these geopolitical uncertainties. Does that make Chinese assets a good place to hide in situations like this? And I guess not just in terms of a short-term diversification, but perhaps as part of a longer-term portfolio as well, given that you've also said the Middle East will continue to be a problem in years to come.
Yeah, plenty to unpack there, but very quickly, there's not an overweight narrative for mainland China, but there is an overweight narrative for exporters to China. But what is important here is that broadly the president, there's a lot to unpack there, rapid fire with all those reporters, but broadly the messaging's the same, and the addition of the past 24 hours is an alliance, a scenario of an alliance to get ships to get through the fertiliser and the energy through the straits. And that makes a lot of sense to bring in China, who gets impacted on their domestic demand. Their domestic demand destruction is going to be more severe because they can't access that oil at that discounted price because of the separate ecosystem that China has for the unofficial oil that's non-US dollar tradable. So it makes a lot of sense and it's pragmatic to get that alliance, include some form of China assistance in there to, again, escort the energy and fertiliser through that strait. That is the difference here and the update over the last 24 hours. Everything else is quite consistent. The world knows that Iran has been the most disruptive regime and recalcitrant regime. Everyone knows that. It's a given. And again, our geopolitical advisors as fund managers, like everybody else, were always alerting us on the ballistic missile build-up as the biggest in the world to date. And that was addressed, and obviously that's doing some of the work for stability at the other end when you go 1 year forward down in the region. But taking a step back, I think this is a very pragmatic language adjusted for the way the president speaks, is that to include China, again, that is impacted. Now, they may tolerate the domestic demand destruction because of the high energy prices a little bit further because their export sector is so elite, they're X minus M. But that seems like reasonable language that could be appeasing the market, all things being equal, and that's pragmatic.
George, great to have you with us. George Boubouras, Managing Director for Research, Investments and Advisory at K2 Asset Management. Let's bring in our Bloomberg editor, Michael Heath. And Mike, we had a lot of remarks from the president. In fact, he's saying Iran's desperate to make a deal. At the same time, he's saying they're not ready to negotiate yet. He says that they've essentially, finished the job, but they still need to finish the job, that they're not ready to declare victory yet. But, then also alluding to the fact that they think that, or he thinks that, it's almost done. Have we learnt anything new?
No, not a lot there, Heidi. I think what's interesting is that Iran's foreign minister came out and very strongly said that they're not interested in making a deal. Now, President Trump said, he'd said before those remarks that that Iran had been wanting to make a deal, but he's not ready to. And I guess that the answer, the point that he'd be making is that the whole nuclear issue has to be addressed, and then the other ones which he didn't specify there, but which have been mentioned are the ballistic missiles and then the proxy forces around there. So it's hard to see how they're going to put enough pressure on Iran unless they can stop Iran being able to fire drones and missiles and that sort of thing. How they're going to exert enough pressure that Iran feels like it does need to cave in like that, because that would be a huge blow to the regime. That said, when you're under bombardment very, very heavily, we're not really sure how difficult the situation is in Iran. Things could move quickly or it could drag out. It's very, very hard to tell at this point.
Mike, President Trump in his comments also talking about the protesters in Iran and deaths and just the domestic politics over there, which makes me wonder, why does President Trump want this war and what does he want to achieve? Because we have seen him being pretty pragmatic about most geopolitical issues. So why get into this right now?
Yeah, look, it's a very difficult one, I think, Avril. It's just... The question, I guess, is that the opening was there. They didn't believe that Iran was going to come through in the negotiations. That Israel had sort of decided that it had had enough and that it wasn't going to take this risk anymore and was going in. And so the US felt that the time was right as well, rather than just let Israel go ahead. But, it's always this underlying issue of the nuclear threat, of the terrorism threat, etc. As George mentions, Iran is a long-term destabilising influence in a very, very important region, and we can see its importance just by the oil markets and the markets in general from 2 weeks of conflict there. So I think it was more that the negotiations weren't going anywhere. Israel had sort of made its decision, and the US felt, well, if it's going to happen, let's make it happen now.
Bloomberg editor Michael Heath. More ahead on the Asia trade. This is Bloomberg.
We're hearing the latest from the Finance Minister of Japan, Satsuki Katayama, speaking about the state of the currency markets, saying that they're watching the FX market with that usual lingo of high sense of urgency, also saying that they're ready to take bold steps on FX if needed, also adding that the G7 has agreed that they share concerns about market volatility. Of course, the question is, will they take action? So far, this sort of verbal nudging has led the Japanese yen to strengthen a little bit towards the 159 level, but not really by much, especially after Katayama already has said earlier this week that authorities are in closer contact than usual with U.S. counterparts, but declined to comment on intervention. And we also saw limited impact from those comments as well. And you can see the yen trading at that 159 level, Haidi.
Wow, Shery, lots of comments from President Trump aboard Air Force One, right, talking about just how these operations in Iran are going at the moment, a high degree of confidence. When it comes to the Iran deal, no nuclear weapons is where it starts. And we know that this is going to be sort of the real point of contention in terms of whether they can reach any sort of compromise on that. President Trump at various points saying that they desperately want to make a deal, but that they're not ready to negotiate yet when it comes to the Iranian side. The US and Israel Israel not ready to declare victory on Iran just yet. But he did also say that he thought oil prices will come tumbling down as soon as the war is over. Is that what we're seeing at the moment? This is the pricing when it comes to New York crude and Brent traded crude. Pretty flat at the moment. We've erased those gains when it comes to Brent. The focus is sort of shifting on physical supply, trying to gauge the impact to supply after the US attacks on the main export hub in Iran. Let's bring in our oil and shipping reporter, Yun-Cheol. How impactful is the attack on that we saw most recently on Kharg?
So this morning when markets opened in Asia, we saw Brent shooting up 3%. So that's an instant reaction to what we saw over the weekend when the US attacked Kharg Island. But I think as the day goes on, we're seeing more signs of people being more measured in terms of trading oil prices. And now we see it coming flat, as you mentioned earlier. So this is really a reflection of the constraint risks to what we've seen happening over the weekend. The US has shown that they have the ability to attack Kharg Island, but they have spared oil export infrastructure for now for Iran. So we're now shifting back the focus to how can we ensure that oil continues to flow through the Strait of Hormuz. And we've seen President Donald Trump urging different countries to send in naval escorts to ensure the free passage of ships through that very narrow waterway.
Wei-Lun, President Trump also said that oil prices will come tumbling down as soon as the war is over, given that this year we're actually concerned about oversupply. Could this be the case once this war wraps up? According to the Pentagon, that could take up to 6 weeks.
Right. Oil prices will definitely come down for sure once the war ends, but how fast it comes down is anybody's guess, because already just barely 2 weeks into the war, we've already seen it biting Asian economies. We do see oil, port logistics, infrastructure, refining coming down, people, exporters shutting down wells. So all these will take time to go back to where things were before the war, right? And of course, the ship owners, the charterers, the traders, it would take a bit more confidence for them to go back through the Strait of Hormuz. And these reversion to the pre-war normals, this will take a bit more time, even though the war might have stopped.
Yun-Cheol, good to have you with us. Oil and shipping reporter there on President Trump's comments on oil and, of course, the broader Strait of Hormuz, where President Trump also said that China should actually come in and help, that the U.S. will actually remember who helps in this war. President Trump also saying that he could delay his planned summit with Chinese President Xi Jinping. Speaking with the Financial Times, he said that he expects China to help unblock the Hormuz Strait before he travels to Beijing. Let's bring in our China correspondent, Mingmin. A very high-stakes conversation that could happen, but also at the same time, President Trump's comments seemed a little bit more wary of where this summit could go.
That's right. Actually, for a long time, since the Iran war had broken out, there had been a lot of speculation about whether that would put the Trump-Xi summit at risk of being cancelled or delayed. And this is the first time we heard from President Trump suggesting that he might delay this summit with President Xi. The precondition, he says, is he wants to see China helping to keep the Strait of Hormuz open, to send warships to the Strait. And so far, we had seen China's response to the Iran conflict has been pretty predictable and quite measured, right? It has not provided anything beyond rhetorical support. And analysts say it is quite unlikely that China would want to be entangled in a conflict far away from home. And if you look at Chinese state media reports or state-linked media reports, they tend to see the root cause of this conflict as the Israel and U.S. attacks on Iran. So they see this move as the U.S. trying to drag other partners into a conflict that it started. So it's not clear how willing China is to accede to President Trump's request. But if the Trump-Xi summit is cancelled, it's going to look quite bad for U.S.-China relations so soon. In fact, just a week after Foreign Minister Wang Yi had said last week in Beijing that this could be a landmark year for U.S.-China relations if both sides maintain their sincerity in communications.
And there's no shortage of non-war related issues, right? The first day of trade talks is already done. What else has been discussed?
Interestingly, we are getting a report from Reuters based on sources that the talks were pretty candid and constructive, and it seems like China was showing a few signs of goodwill, saying that it is open to buy other agricultural goods, including poultry, beef, other non-soybean row crops as well, and they are willing to commit to buying that 25 million tons of soybeans that they had previously pledged to buy. And we also know, according to the Reuters report, that the U.S. is pressing China to buy more U.S. oil and natural gas as well. So the U.S. clearly also emerging as a winner in this Iran war, given that it is the world's largest source of LNG exports. It also wants China to buy those Boeing jets. This was something that Bloomberg has previously reported, a deal consisting of about 500 jets that could come through after a long drought in Chinese purchases. There's concern about securing rare earths as well, particularly an item called yttrium, which is used in jet engine turbines, and the U.S. wants to ensure that these rare earths remain flowing to the United States. And of course, when it comes to China, clearly an issue that is of concern to them would also be the Taiwan issue and whether the U.S. would cancel that $13 billion arms deal with Taiwan.
Also an issue, the Section 301 trade probe that we're seeing from the USTR, and we finally got the response from the Chinese Commerce Ministry.
Yeah, obviously this is something that could lead to more tariffs being levied on Chinese goods a few months down the road. And so the Chinese Commerce Ministry on Friday had put out a statement saying that China has fulfilled its end of the bargain in a Phase 1 trade deal, but the U.S. has been taking a series of measures from investment restrictions to export curbs as well that really violated the spirit of the Phase 1 trade deal, and calling on the U.S. to correct its mistakes and not to go ahead with this investigation. And if they do insist on moving ahead, China will do what it can to protect its legitimate rights and interests. We also heard from the Chinese Foreign Ministry as well in relation to a separate probe into China's forced labor practices. China saying that it rejects those accusations and these are lies that the U.S. is creating in order to politically manipulate the situation.
Bloomberg's China correspondent Min Min Lo there with the latest. Well, in the meantime, Beijing's efforts to build out its energy sources is gaining fresh momentum amid the war in the Middle East. China is one of the largest global investors in power grids as it looks to boost its use of renewables and curb import reliance. Bloomberg reporter Dan Murtaugh joins us now from Beijing. And so there's been a lot of talk from investors and market participants about how the electrification progress being made in China really kind of makes it an outlier in terms of being less at risk from the Middle East crisis. Has this really just accelerated the ambitions even more?
Yeah, I think so. You know, China requires imports for about 70% of its oil consumption, about 50% of its natural gas consumption. And so anytime there's volatility in these markets like there is right now, it's just a reminder of them, of the exposure and risk that they have. You compare that to the electricity market where it's mostly relies on coal, hydropower, wind and solar, which are all generated here domestically. And there's a lot more buffer there that they have for these times of geopolitical tension. And so whenever you have moments where oil spikes to 100, that's only going to reinforce to China's leaders this long-term transition toward electrification and away from oil and gas.
And we're seeing China's state-owned grid operators issuing record amounts of bonds. What are the implications of this?
Yeah, this is part of a long-term strategy. You know, the grid used to be very simple in China. It was, you know, burn coal, electricity goes straight to houses, and the power grid was built to handle that. And now they're adding in all these new renewables. They're having to expand to cover new data centers, new EV charging stations, and all of that requires new power lines, new batteries, all kinds of infrastructure. And so State Grid sold about 700 billion yuan worth of bonds last year. It could raise that to 1.2 to 1.4 trillion yuan per year over the next couple of years in an effort to keep up with all of this new renewable power and all this new demand that's coming online.
What are the challenges, though? I mean, massive investment when it comes to any kind of Chinese effort makes me think overcapacity is always an issue, right? But is there a challenge in ensuring that even big amounts of renewable energy growth can sustain that energy security picture?
Yeah, the big challenge is not so much in the building of the power lines and the batteries. We all know China is incredible at constructing infrastructure, so that will come online as they plan. The real challenge for China is it has a power market system that again is based on an old model of centralized plants directing energy to one-way lines to consumers, and now it's having to sort of reform that because you have people putting rooftop panels on their houses. You have desert bases far away from cities that are using the power, and so that's going to require a lot more market reform and a little bit of political backbone to push back against some of the indentured interests that are benefiting from the current system. And the real question is whether China's going to be able to reform its power grid and power market system in an effort to get these power lines and get all these renewables used the best way possible.
Bloomberg reporter Dan Murtaugh there with the latest on the power situation in China. He joins us from Beijing. Great to have you with us. More ahead. This is Bloomberg. Take a look at how we're trading early in the session. The Japanese yen strengthening a little bit after the finance minister's comments when it comes to watching for FX volatility, that they're ready to take bold steps on FX if needed. And we're even hearing from Prime Minister Sanae Takaichi speaking in Parliament, saying that she will speak about the Iran situation at the U.S. summit. Of course, she's expected to meet with President Trump later this week. And we know that we had heard from senior officials here in Japan that sending more help towards Iran would be difficult. So we will be watching for more details to come when it comes to that U.S.-Japan summit. In the meantime, the Kospi and the Kosdaq seeing a little bit of divergence as the Kospi is now rebounding from those losses that we saw in the previous week. Of course, a lot to do with the oil story and how the economy is being supported by the government. And South Korea now saying that they will actually use extra tax revenue to fund a supplementary budget. They want to cushion homes, businesses from rising oil prices triggered by the Iran war. And the country is one of the world's most energy import-dependent economies. So Finance Minister Yun-Cheol spoke with us exclusively on Friday. Take a listen.
지금은 이제 중동 상황이 글로벌 경제를 지금 다 이렇게
Right now, the Middle East situation is overshadowing the global economy. The government's top priority right now is responding to the Middle East situation in the short term, while reducing Korea's structural dependence on oil over the medium to long term.
Which is why you just announced a fuel price cap. Why this specific measure instead of others more potentially broadly or more targeted measures to support the economy?
도입한 게 중동 이전에
Currently, the imported oil is from before the Middle East conflict. During this 2-week period when imports have been halted, it will come in at a higher price. However, if the future imports become even more expensive, the government plans to raise the price proposal accordingly to compensate. The government plans to decide at that time whether to reduce taxes again.
정부가 그때 가서 판단할 계획으로 있습니다.
If you actually need to help the refiners, does that mean that the government will be using its own budget in order to do that? And how are you planning to pay for that cost?
그래서 만약에 이 과정에서
Therefore, if refiners incur losses during this process, the government intends to compensate for those losses.
Would that come from the extra budget?
그래서 저희들이 필요하다면은
We also have plans to prepare an additional supplementary budget if necessary. And in fact, the government has already begun working on this internally. Therefore, it's not just about compensating for the proposed oil price increase. The government has begun preparing a supplementary budget to support those suffering losses due to rising oil prices. Our freight transporters, delivery service providers, exporting SMEs, small and medium-sized companies, the self-employed, small business owners, and young people.
편성을 시작했다 이렇게 말씀을 드리겠습니다.
There's so much skepticism right now, though, in the markets. I mean, we have seen the incredible rally of the Korean stock market just to fall incredibly earlier this month as well. Not to mention the pressure on the Korean won. What more can the government do?
지금 코리안 원의 이제 절하되는 부분은
The won's recent weakness is not due to shortage of dollars. Korea holds over $1 trillion in combined dollar assets, including roughly $500 billion at the National Pension Service, more than $420 billion in state reserves, and over $100 billion in private holdings. The recent depreciation has largely reflected Middle East-related developments, while last year's movements were influenced by increasing outbound investments by residents. This year, the current account surplus is expected to improve further on the back of the semiconductor boom. Secondly, WGBI inclusion could bring additional foreign inflows into the bond market, and the pension's new hedging framework could enhance dollar stability.
The rally that we have seen recently, has that reflected the economic fundamentals of South Korea? And how much is it speculative herd behavior together with FX, together with the Korean stock market? And is that a risk?
지금 한국 스탁 마켓은 이 단기간에 세계 1등으로 많이 올랐습니다.
The stock market's recent drop of over 700 points following Middle East tensions is seen as part of a normalization process after strong gains. It is not viewed as drastic sell-off. We are closely monitoring volatility in the foreign exchange and bond markets and stand ready to take policy measures if necessary to stabilize conditions.
The uncertainty coming from the trade environment. Again, we're hearing from the U.S. Trade Representative, 301 section probes into alleged excess manufacturing capacity. Have you spoken to Washington about that already?
최근에 워싱턴하고 얘기는 하지 않았지만은요.
Although we have not had recent discussions with Washington, the U.S. side has reacted very positively to Korea's passage yesterday of the special bill related to U.S. investment. The overall response from Washington has been very favorable. Now that the legislation has passed, specific investment projects will likely be determined through working-level consultations. The U.S. has shown strong interest in the energy sector in particular, and Korea believes it has competitive strengths in that area. We intend to pursue mutually beneficial cooperation that will be good for both Korea and the U.S.
그런 방향으로 이제 협의를 하려고 합니다.
When it comes to the Supreme Court actually striking down many of President Trump's tariffs, for Korean companies, is that an opportunity or does just create more uncertainty around trade?
지금 이제 그 미국 그 대법원에서
Regarding tariffs, if the U.S. Supreme Court's decision invalidates the 15% reciprocal tariff while maintaining 10%, Korea, having already reached a 15% agreement, does not expect higher rates than previously agreed. On Section 301 actions affecting surplus countries, including Korea and Japan, the government will actively engage and explain its position.
South Korean Finance Minister and Deputy Prime Minister Yun-Cheol speaking with us exclusively. We have more ahead on the Asia trade. This is Bloomberg. President Trump is demanding other countries contribute to the defense of the Strait of Hormuz. He also claimed Iran badly wants to make a deal, but is not ready to negotiate. Let's bring in our politics editor, Laura Davison, who is today in Tokyo. And what a time, because, of course, Takaichi is meeting with President Trump this week, and she's talking about discussing the situation in Iran with President Trump.
Yeah, she has been very clear that she's really not happy with the situation. She's called into question the legality of the strikes now that, Japan and other allies are being asked to essentially, contribute and pitch in, almost in a way that Trump seems to be threatening allies a little bit here, has expressed a lot of hesitance that Japan, which really likes to seem out of step with the U.S., is really breaking with the country. And this is noteworthy. She's going to the White House. She'll be meeting with Trump in the Oval Office on Thursday. Trump has a warm relationship with Takaichi. She's actually well placed, kind of for all the leaders in the Asia-Pacific region to sort of deliver a message of saying, hey, look, we have a lot of concerns. You're causing a lot of problems, and with no clear outcome of how to end this war.
What are going to be the pressure points, I guess, to create an outcome, right? Because Trump is sounding confident even when it comes to the domestic oil and inflation picture, right ahead of, we know, a very sensitive summer driving season in the U.S.
Yeah, This is really not clear what he wants here. He has had a couple different messages on what he wants. He said he wants to make a deal with Iran. He wants to talk with them. Then he said he wouldn't talk with Iran. Now he says the U.S. is talking with Iran, but that he doesn't think that Iran is ready to make a deal. I'll note that Iran, throughout all of this, has said that they are not negotiating with the U.S. and are not looking to have these sorts of talks just yet. So this has been quite confusing. Trump, just now told reporters on Air Force One that any deal would need to include a cessation of a nuclear program. But it's also, he still has yet to articulate, exactly what he's looking for here. Trump has really touted the U.S.'s military might, but a lot of the discussion in Washington has focused on controlling oil prices and energy prices, and less on what is the diplomatic or military solution out of this war. That's what's really caused a lot of concern, both within Washington as well as within markets, that this could go on for weeks longer. There isn't necessarily a plan of how to get out. And this is why you see Trump leaning, on allies to get oil flowing through the Strait of Hormuz.
Yeah, we have heard potentially that it could go up to 6 weeks, according to Pentagon sources. But given that we're still trying to figure out what President Trump would consider a win, what are the risks of this continuing for longer than expected?
The risks are very high. The biggest win that the U.S. has had is killing the supreme leader. That was now weeks ago. So the longer they keep this going, there's mounting pressure to show more and more successes here. And the American people really haven't seen that. They're growing increasingly displeased with the war. Gas prices continue to rise as we're headed into the spring and summer travel season. And of course, voters head to the polls in November, Republicans facing an uphill battle. So all of this is weighing this domestic issue on what happens overseas.
Retail gas prices in the U.S. at the highest in over 2 years. Politics editor Laura Davison here with us as we continue to follow the fallout of the Iran conflict. And of course, oil prices, Japan now saying that the government is beginning the release of reserve oil. We have seen more than 400 million barrels released since last week globally. We have more ahead. The China Show is next. This is Bloomberg.